So we're going to take a deep dive look into American Express's CD product. We're going to talk about if this is a smart investment at this time with your money and the benefits that can come for your personal and business finances eventually when you use this product strategically with American Express, how it can grow your banking relationship, get you access to more capital, build up your credit score, and help you save more effectively. So in order to put some context around this, let's start with the definition of CDs just to make sure that we're clear. A lot of people, believe it or not, aren't really sure what this product is and where it fits into the banking system. CDs are certificates of deposit. They're basically products that are FDIC-insured deposit products by banks. They're a contract between yourself and the financial institution, in this case, American Express, where you put that money in and you lock it away at a specific amount of time. And because you put that money up for a specific amount of time and the bank can lean on that, they will pay you a higher rate of return than, let's just say, their standard savings accounts and even sometimes their high yield savings accounts. And there's value in this. We're going to explain why they're willing to do that in a moment. So CDs are very safe products. They're as safe as they're going to get for somewhere to put your money. They're as safe as your checking or savings account is. Again, they're not an investment product. They are FDIC-insured products. So very safe products. And at the moment, at the time of this recording, in early 2024, they are paying reasonably well compared to the last 20 years or so because the interest rate market has changed over the last 2 years. The Federal Reserve has raised interest rates. That has brought up the interest rates that banks are earning and paying at the same time. So to put context on that, the APY, which is the annual percentage yield on deposit products, has increased in the last year and a half or so, 2 years. So in order to understand why American Express would pay you more to secure that money for a fixed amount of time, you need to understand one of the primary ways banks get paid. Banks make a very significant amount of their profit by holding money on deposit and basically using that money that they have on deposit, your money, our money, to invest in various ways. They lend it out to other people, and there's other strategies that banks use to take the deposits they have on hand to make a profit, to create a spread. For that reason, this is what gives value to having a CD with the financial institution, again, in this case, American Express, because checking accounts and savings accounts are great, and banks will find ways to reward or incentivize you to use those products to add value to their institution and add value to their bottom line. But when it comes to both of those products, they're liquid. That means that money can come in and go right back out. And banks find ways to make profit off of that. They find ways to find value in that for sure. But there's a different level of value when they know that the deposits that are on hand are going to be there for an extended amount of time. This allows them to have a defined investment strategy and probably get better returns on that money because you've guaranteed that you're going to put that money up for 2, 3, 5, 6, 8, 9, 12, so on and so forth amount of months. And once you do this, again, the bank, because of that guarantee, because they know how long that money is going to be there, they're usually going to contractually guarantee you a fixed guarantee rate, even if the interest rates in the market change. Like here in 2024, at the time of this recording, the Federal Reserve is projected to drop interest rates at least 3 times sometime this year. That's going to pull deposit rates down. But if you are locked into a CD at that time, even if rates come down and that same CD is paying less for new clients, you're locked in on that money. So what are the advantages of this? Is this a smart move right now? The answer depends on your personal finances and your financial goals for this year. If you have excess capital and you're looking to build a banking relationship with American Express, this is a phenomenal way to do it. I encourage a checking account with any institution, private institution, because the checking account is like the center of orbit for your deposit relationship with banks. But that having been said, the next best thing you could do is definitely going to be a CD. Usually a minimum of $1,000 to get you started with the CD. Institutions vary. With American Express, I believe it's $1,000. I'll make sure I link in the description or put it up on the screen to verify that. But usually $1,000 to get you started. Interest rates are going to range. It depends on the term that you select. The banks are going to put the higher interest rates, the better APYs on terms that they deem more favorable. So what that basically means is you might think in your mind, the longer I put the money up, the more they're going to pay me. That's not guaranteed to be the case. Banks in this environment are going to actually have some of their best rates on shorter term CDs. Their CDs might go out to 5 years, available terms, but they may pay you the best at 6 to 9 months. The reason for that is because banks want to make sure that they continue to make a spread on what they're paying you versus what they're earning on that money. So if they start to lock you in at a really high interest rate for 2 years, but interest rates come down in 6 months where they can only make, 5% on a mortgage, but they're paying you 6% on a CD, it gives a negative spread to the bank. Hopefully that made sense. But basically, when interest rates change, which the environment is saying that is highly likely, banks don't want to be stuck overpaying on deposits and earning less on loans, okay? So you want to select a term that'll give you either the best rate, or you want to select a term that's going to give you the most money. They're not the same. Very important. This is a huge golden nugget right here. Just because you're getting a higher APY does not mean that you're making the most money. You may get an APY of 5% on a 6-month CD. And let's just say you put $1,000 in there. Well, 5% on $1,000, if my math is correct, is $50, okay? That same $1,000 over a year, if they're paying you, let's just say, 3%, gonna get you $30. Now let's double back to that 6-month CD at 5%. That's an APY of 5%, annual percentage yield. You're only gonna have it for 6 months. So that technically means you're gonna get paid 2.5 in a sense of speaking. You're gonna get half of that because you're only completing half the year on that 5%. So that means technically you're getting $25 in that scenario. So that means the 1 year at 3% is actually paying you $30. You're making more money. Keep that in mind when you're doing the math on setting up these CDs with American Express. Time beats interest rate in most cases. So keep that in mind. That having been said, what does this tie into the relationship building? What does this tie into potentially building out your credit for your personal and eventually your business finances? Again, you're putting good money on deposit with American Express. This will be great data for relationship banking with American Express, especially American Express, who leans heavily on their relationship banking to determine their extension of credit to you. So that means that you putting money, if you don't already have a credit card or a credit relationship with American Express, or it's a thin one, doing a CD can increase your odds of getting approved with a personal credit card, charge card, or even a business credit card with American Express, because you're expanding your relationship banking and your data points with American Express. You're putting money on deposit for a guaranteed amount of time. This shows financial prudence, responsibility, and again, it's allowing American Express to make money. This is going to lead to them being willing to extend credit to you and maybe even at higher limits because there's money on hand. It's a hell of a lot better than coming into American Express cold or coming in with smaller deposit release, just a checking account. Checking and CD is more attractive. Again, so this can boost your credit because you're going to get potentially approved for a credit card that you may not have gotten approved for, or you're going to get a higher limit on that card, which is going to improve your utilization. It's going to improve your available credit, which ultimately boosts your credit. When your credit is boosted, your personal credit is boosted, your banking relationship with American Express is boosted. Guess what happens on the business side? You get access to more financial resources and more capital at better terms, higher limits on the business side. It all snowballs in circle and synergy. A small, decent deposit relationship with American Express, like a certificate of deposit, will expand your data points with American Express and help you get access to more financial resources and more data with American Express. This will graduate your personal and business finances. Comment down below. Again, let me know what your relationship is with American Express. Let me know what your thoughts are on CDs right now. Are you attracted to this? Is this a new concept for you, or are you already aware of CDs and you've been kind of deciding if you should get into CDs or not? I also want you to continue to check out this series on American Express by checking out the next video that should be coming up on the screen, somewhere on the screen, covering more data points and more ways to build your relationship with American Express. Other than that, if you want to learn more about myself in the channel, start in the description section and work your way to the about section on the channel. To all my pioneers out there, welcome back. To my new viewers, welcome in. I want each of you to stay focused, stay in motion. I'll see y'all soon.